Hello guys, welcome to Savvy Money Show with me, host Sean. I apologise for any background noise. I am outside, so it is unavoidable. But we're on a morning walk and talk. For those of you who watched my previous video about Trump and the market, I did warn that shares would take a tumble from what was happening, and we're going to have a look at a few Q&As and a few stocks that I'm looking at, and some sales did as well. Well, with markets are almost in a correction territory. For those of you that messaged me saying when I did a video stating how I was going to take profits on some companies, that because the market's too bubbly, that because they held, they got the same gain anyway by holding. That was true up until this week, when the markets went down. But for those who are going running for the hills, you should know that there is traditionally a correction every year. It's just we haven't had one for the last couple of years. So it is healthy for the market to correct before it goes back up. What does this mean for my portfolio? Well, I rebalanced some of them. Likes of Vodafone. I've been trading. It's one of those that I was 50-50 on. It just looked too good a value, and there was too many good things. I sold it, and then it announced the dividend cut. I bought it back, and then I sold it again. So I was making 5% each time on that. And then we had Viking Therapeutics. This was a fairly new position for me. Again, it was a 6% I made on that in a very short period of time when the market was going down. Now, with Vodafone and Viking, I did put a fairly large amount in, so I split my profit between 3 shares and the cash profit. But if they carry on going up, I will sell into further profit and put that elsewhere. I have been given a few other questions, such as where to put your money if you're on benefits. I will do a video on that at a later stage. Don't forget to hit the like button, comment and subscribe if you want to see further videos. Don't forget to check out links in the description below, where you pick up a free share with up to £200. I use each one of the platforms, such as Trading 212 for my ISA, Freetrade for my other trading platform, and Lightyear for receiving interest on my cash that I'm holding while I'm waiting to invest it. There's plenty of other freebies as well, such as the cashback sites, Webull and the likes. Now we're going to head on to the next ones with the buys. Going with the spec stocks first. Caribou. Now, with the cash it has on hand, I can't believe it's this high. I didn't sell earlier in the year when it was at the heights, but I did sell when it, I did sell when it was at 2, and I've been kind of putting money to better use until now. Has a lot of money on the balance sheet, and people were going crazy for it last year and earlier in the year. I think at this price it's worth a small punt. And we have CRISPR Therapeutics. I actually bought some yesterday at $41. For those of you who are unaware, I bought call options last time before the FDA approval, and it went to 95 or above. Of course I sold out at 90 of all my shares and call options, and I'm getting back in now because it's the first FDA approved CRISPR technology, and it's revenue generating and has a lot more in the pipeline. I do feel this has a lot of potential. Now, and tell ya, for those who have been following me, I sold at 22 earlier in the year. I bought yesterday at 9.15. I'm not going to sell here. I'm looking for a much bigger profit margin, and I do think I will get it. Has a lot of late stage programs that should provide data this year. Go back and see my videos if you want more information on that. Now, Beam came out with good information. Hit $35 a share yesterday, and then sold off to 26. If it hits 22, I will be picking up more. Sorry they're so quick, but don't have a lot of time. Qualcomm. For me, this is the value AI play. This is a PE ratio of 16.5, forward dividend of 2.2%, and you can see it's forward PE of 13. It just is a complete provider. It used to be reliant on Apple, but now it's more diversified. I do think it's one that I did sell out when it was at 200, and because I was worried about the Apple effect, and now I've got back in, and I think long term I will make money on it. My number one pick, AMD. Now, I did a video a week or two ago saying at $95, and I couldn't resist at 96. So what I've done is I've bought quite a few shares at 96. I think I will make money over the next 2 years on this. People they are not an Nvidia. People are comparing them to Nvidia, but they are in their own market, and you need to look at what they excel at, where they have 50% of the market. I do want to also speak about people who are talking about Nike and Foot Locker, where JD Sports. Now, I've been buying it and then I've been selling it when it goes up a bit, keeping free shares just to release some money, and now I just can't resist. I have to keep, because it keeps going below. So it keeps going up to 80, 79, 80, and then it keeps coming down to 70, 75 buy range. This is a company that has a PE of 12.5, and its market cap is half its enterprise value. It has a forward PE of 6, price to sales 0.3, price to book of 1.6, and it's expanding at the same time. The thing about them is they have the shoplifting issue, yes, but so does every other retailer. Now, I think we need to stop thinking that every retailer's getting cleared out, and think that we can think that their security on the door can do their job. They're still making a massive amount of money, and we need to recognise that. So I'm going to be buying into that. Another couple of UK companies, Greggs, and you see it hasn't even gone down when everyone else has. 12.7%, 3.6% dividend, and 12.5% PE. Now 0.97 price to sales, 3.4 price to book. It has some issues, such as shoplifting. Again, there's been a lot of shoplifting, and you have things such as the lines that they have in the store, and people just putting down stuff and leaving because there's such huge lines. But they are opening more stores. They're also bringing out new products, such as this massive bacon roll where you have like 100 slices of bacon for £85, and I've seen on TikTok people wanting to do the challenge, and then we see that is a massive margin for them. I mean, how much is a pack of bacon? Yeah. I just think it's a huge opportunity here. We have SimilarWeb, which I spoke about, and again, this is a spec play, but it's a spec software play, and I do think it's going to show profitability. Its price to sales is 2.85, and I do feel this is one that should be looked at. And let me know what you guys are looking at. Let me know what you guys are buying, and I'll do a video on it. Or if it's something you're selling, if you're clearing out the old trades that didn't turn out. And I'll see you in the next video.